Hey everyone, welcome back to Be Rich. Today we have Sashwath with us in the studio. We thought we'd do another one of our explainer videos. A lot of you have been wondering what are the pros and cons and the different ways to buy gold in India right now. We have physical, we have ETF, and we have the bonds. Each one is in a different market. There are different positives to it and there are different negatives to it. Shashwath will walk us through each one and then we can discuss this further.
Yeah. Which one do you want to tackle first out of the three?
Everyone wants to know what is this ETF, gold bees.
ETF, okay. So, an exchange traded fund is a way of buying an underlying asset through a mutual fund type setting where you get a portion of the share and you can buy this in the market. And what this basically does is that you're buying a portion of this asset where you're not actually directly buying this asset, in the sense that I can start an ETF and using the money I get from the ETF, I can buy a lot of gold and then I can sell out portions of the ETF to everyone, equivalent to the amount of gold underlying which is there. And the portion which you own or the stock of the ETF which you own will be priced according to the underlying asset generally, and that's why it's called a derivative asset, because it derives its value from an underlying asset. An ETF standalone does not have any value. Its value stems from its underlying asset, whatever it's tracking. So when you're talking about gold ETFs, you're buying it's a way of buying gold without actually buying gold. You're buying an ETF which tracks the price of gold. So all the monetary gains you get from buying gold, if you had bought gold, you will get from buying this ETF. The only I guess difference between buying gold and this is that you won't be able to see the yellow metal. It's something which you can't feel, touch, or you really perceive, and it's not something you can go to someone or some head office and ask for a gram of gold. They won't give it to you. The best you can do is sell your stake in this ETF and then go buy its money's worth of gold, and that is something you can do. But you cannot ask for this gold. This gold is theoretically yours, but you only own a portion of the ETF, and the ETF owns the gold. That is your ETF. What are the positives? The positives is that, one, gold, when you buy in large amounts, has a lot of storage fees because you need to put up a safe or a locker. There's a lot of psychological cons which come with owning gold, which is that, one, envy and familial relations get strained because people see the amount of gold you have and it's always a topic of stress. And number two, it's also weighs down on you because you don't want it to get stolen in large amounts. When you have gold in small amounts, you can just wear it and it's not much of a problem. It's not too much of a stress. But when you are trying to invest in gold as an investment and not an ornament, then you end up finding that it's a lot of stress because you always have to keep checking whether the gold is there or not. So the storage cost, maintenance cost, all of that plays into it, and the psychological costs of owning gold. These are some of the downsides of owning gold. But with an ETF, what you do is you're not actually owning the yellow metal. And even if a robber were to steal all your articles in your house, your gold ETFs will be fine because they're under your name. So by law, it's guaranteed that you will get what is owed to you. So that is an advantage of gold ETF. And the next this thing we can talk about is sovereign gold bonds. Sovereign gold bonds are bonds issued by the RBI which track the price of gold. So you can buy it in terms of grams of gold. So what the RBI, however, stipulates is that once you buy this bond, you can't exit whenever you feel like it. You can sell it on the secondary market, but you can't exit from the scheme as such. That is, you can't go to the RBI and ask them for the money back. There are exit windows available, but there's no outright flexible way of getting out of it. So it's not a liquid sort of situation. That's why you also get a yield on it, where the RBI recognizes that you don't have many exit avenues, and maybe selling on the secondary market is an exit avenue. But so the RBI, what it does is it says, I'll give you exit windows, and to make up for this lack of liquidity in the asset, I'll also pay you 2.5% yield on it. So depending on whatever the nominal value of your gold is, that is, when gold increases in price or decreases in price, the 2.5% on the bond is what will be given to you, whatever the nominal value of the bond is. This is different from your regular type of bond because once the coupon rate on a regular type of bond is issued for the next how many ever years, 2 years, 5 years, 10 years, that amount has to be paid regardless of what the nominal amount of the bond is. So that's the difference between SGB and bonds. And Okay, so here are the pros and cons of SGB. One, if you don't need the money for a long amount of time and you want to invest in gold, then sure, SGBs may be the investment avenue for you, because one, gold is an unproductive asset. It doesn't actually yield you anything, but SGBs do stand to give you about 2.5% of yield on the nominal amount. Number two, you're hedging against inflation because if gold prices do go up. Unlike your bonds, which don't increase in value, what ends up happening is SGB bonds go up in value, and the 2.5% is paid on the increased principal after that. So that is the advantage of your sovereign gold bonds. That being said, the cons are that number one, you don't have liquidity. So if you want to sell it off, you have to maybe sell it at a haircut in the secondary market, and that's something which you may or may not want to do. And opposed to the actual yellow metal, which you can sell at any jewelry store or any of those second-hand gold shops for almost close to all its value, and you can take on a loan on the gold as well, but you can't take on a loan on SGBs. So that is something you can consider. And number three, let's talk about our good old friend, our pal, the yellow metal itself. So, with the advantage of buying the yellow metal is one, it offers a lot of mental satisfaction, as opposed to the psychological impacts of gold. There are also the benefits of gold. Number one, just seeing it around you gives you that satisfaction of saying, yes, I've done something, and it's a tangible way of feeling it. And it makes you more motivated to save. And seeing the gold comes with another benefit, which is that it encourages you to stick to a certain plan which you've come up with. So if you see that your gold collection is being added to gram per gram per gram, it's not the same as when you see an SGB, because you're just buying a new bond. That's not really much. So that's an advantage. Number two, gold, as I said, you can pledge it for gold loans if time of need, and you can also sell it very easily. No one's going to ask you any questions, and gold is always something which you can keep. And if you need, as my uncle says, has said multiple times, if ever you need to flee the country for some odd reason, then having the yellow metal with you is going to give you a lot of leverage. But the advantages of gold stem from the idea that it gives you a lot of leverage and freedom, and that's the advantage of having the metal with you on in person rather than some paper. And there are some disadvantages, as I said. There are your storage costs, your psychological pressures. It's not a productive asset. So these are some of the things which you can consider while buying the yellow metal. And now I'll pass it over to my uncle to see what he thinks is the ideal way in which an investor should go about this.
Well, Shashwath has spoken so eloquently. I have nothing much to add to this. And saying I hope your doubts on the three methods are clarified. Basically, the first method, the stock ETF, it is the old way of how currency was backed by gold, meaning the ETF issues their own version of their currency units based on backed by them having actual physical gold. Like how the dollar was backed by gold. You cannot go and ask the Fed to give you your gold back from Fort Knox, but it was there. In theory and practical, it was there. And the dollar was against that. You needed to have more gold to issue more notes. So that's how the ETF works. It's like the good old days of currency backed by gold. Bonds, gold bonds, I think is absolute rubbish. Like he said, you can't exit it. It really doesn't offer anything. Very small yields offering. And yes, gold price goes up when you can get something out of it. But of course, capital gains comes into all this.
Yes.
So again, I don't know if it's worth it. I think it's just rubbish. So it comes back to the whole notion of owning physical gold. And that is also a very unproductive asset. And why do we do this gold? Why do we historically buy gold? Because way back when we started our civilizations, we didn't have anything else. We didn't have industries. We didn't have stock markets. We didn't have foreign currencies. People relied on this as a backbone of storage of wealth. So that is very historical, our dependency on gold. So if you remove that actually out of the equation, gold has no use. And as time goes on, as our generations move further and further, gold will lose more and more value in sense of society. If people don't see it of being any use, it's like walking on the pile of granite. You will see it in archaeological sites where huge boulders are there by ancient civilizations. And those are currencies. People used to trade seashells as currency. So now it's valueless. If we look at it and we think, if I give you a bunch of seashells, you throw them on my face and say, what are you giving me? So there will come a day when gold will also reach that stage because civilization and everything is evolving. and the use of gold as a storage of wealth and value will also disappear. Like Sashwath was, we were discussing yesterday, at the time of Aristotle, having books in your house was considered wealth. That's where knowledge is wealth comes from. We were discussing that. So people will have lots of books in their house. They won't even read it, but they'll keep it to show that they're very wealthy. Gold is like that. So have some of it. Like Anand always says, keep a little in case of a situation where you have to leave the country or you're up against the wall. You need to quickly get some money for a surgery, or someone's in the hospital or something, some weird
Calamity,
reason.
yeah.
You need instant cash. Gold can give you that instead of keeping stacks of money. And that too, if let's say you have to leave the country for some reason, they cannot take Indian rupees and go, no, they're going to take those rupees. So gold is the only way you can take your wealth out of India in an emergency, in a situation where you don't have a choice. So a little bit should be more than enough. Just enough to start your life on the other side. More than that, you cannot carry it anyways. Even if you have a room full of gold and you have to flee, you cannot, how much will you, you've seen in all the movies how comic it will look when the guy is trying to shovel gold. When he's found, Alibaba has found the cave full of gold, and instead of saving his life, he'll drown in the gold and he'll die. Don't reach that situation. So keep gold in perspective is all my advice.
He said it best. And there you have it.
Chalo. I hope you guys found this video informative and interesting. And if you did like our video, please do think of subscribing to our channel and turning on the bell notification. And if you think this kind of content your friends and your family would be interested in, please do share it. Again, we would like to thank you for joining today's on Be Rich.
I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.